What's going on, everybody? We're back with a video. So, Mark, SolarGames. As promised, I was going to deliver my perspective after listening to the Hasbro Q3 earnings call. Again, not earnings call, losings call, loss call, if you will. So basically, they get on the call and the analysts aren't happy. I think most of the people who are listening understand this is mostly just a lot of pandering, a lot of lies and deceit, to put it lightly, actually. So, Hasbro's been on this plan of what they call Blueprint 2.0. It's mostly just saying, like, we're not going to have like 1,000 brands. We're going to really focus on a few, let's say 10 or 20, right? And really put our efforts, marketing, whatever, behind these things. Overall, good idea. Because again, it's like, why not do this? Of course. Unfortunately, though, the execution has been pretty slow, and the results aren't great, right? So on the toy side of things, Q3, I mean, they had a decent revenue, right? 900 something million, but the problem is only 90 million of that is profit. So that's a 10% margin business, right? Now, again, 10% is pretty good, double digits, it's decent. The problem is this is like the best quarter they've had, right? And that's saying a lot because a lot of other times this is like a 4-7% margin type of business. And that's a lot of inventory. That's a lot of toys that don't sell. That's a lot of things that they're just kind of holding on to, right? And think about all the marketing and the risk that you have to take. And this is really tricky. Now, of course, Wizard of the Coast performs super well. In fact, I think Wizard is on track to basically hit 50% profit margin. It's insane how well Wizard has done. They basically beat their Q3 last year in revenue again, and then their profit for this last Q3 was almost doubled like their profit from last year's Q3, right? And that just goes to show that Lord of the Rings is doing super well, and obviously it's a set a lot of people were looking for, and it does seem like it's selling pretty well. Now, I think Universes Beyond, all things set aside, that one is the least offensive because I think Lord of the Rings is very basically it is exactly what Magic is, right, in a lot of ways. And it does help to print cards that are actually powerful that go into certain formats like Modern, right? So there's that. A couple cool key points. Number one, there's gonna be an animated series for Magic. I didn't hear about this until this call, but Chris COCKS is really nonchalantly just dropping that, yeah, we're gonna have an animated Magic Netflix series coming soon. Like, whoa, okay, all right, so we're jumping on this train. I hope it's good. I hope it's man, can you imagine if Magic's at Arcane level? That would be insane, right? Like the amount of really cool storyline, dialogue, animation, stuff like that. I suspect though it's going to be a little bit lacking, and I really, really fucking hope, man, this is not some Universes Beyond animated shit. I don't want to see Liliana and then Optimus Prime jumping out of nowhere. You know what I mean? Let's just keep it Magic, please, and it's not going to be some weird, I don't know, a bash or a medley of all Universes Beyond. Yeah, okay. They did talk about supply chain savings and further reduction in costs. This is all the operational excellence type of things they're doing, which makes sense, right? A lot of this is they're cheapening their materials, basically. They say things like, oh, we're going to make sure things like Jenga does not cost as much, but of course, of the same quality. Yeah, it's not going to be the same quality. They're probably shifting factories to lower cost areas, shipping reduction, whatever, that kind of stuff, right? Boxes, changes. And of course, some part of this is the play boosters. They didn't talk about that on the call, but I would think analysts or people, you really have to know things about Wizard of the Coast and Magic the Gathering at a certain level to even know about things like this. A lot of the analysts, they're not reading into things like this, right? Universes Beyond, delighting millions of fans and growing the business, which is expected. I think no one's going to argue that Universes Beyond is hyper successful for Magic right now. I think a lot of what my comments are is, what is the future though? Because again, it's not just about money today, it's about what's going to happen in the future. So The other thing they mentioned was Baldur's Gate and Monopoly Go doing super well. So when I heard that, I'm like, oh, maybe I'm wrong, right? Like Mark is like an idiot. Like, what am I talking about? I know nothing, right? So they combine the two together, and they're looking at $90 million in like royalties. So I'm like, wait, hold on. Either the game is performing poorly. So let's take Baldur's Gate out of this. Okay, I think Baldur's Gate, from what I've seen, have not played the game yet. From what I've seen, is a very well done game. So let's take that one out of here and say Monopoly Go, right? For comparison, for those that don't understand how lucrative the mobile game business can be, for instance, Diablo Immortals, right? One of the, most lucrative mobile games, makes about like $1 million a day, I think, something like that, right? So like, your general like 365 day, I think it actually could be more than that, but $1 million revenue a day is like insanely good, right? So that's the kind of level that you should be looking at. Now, I know it's royalties because it's a different developer. They're building the game separately and they're like just using the license. But I don't understand how that, like, unless Monopoly Go is just really not doing that super well, I don't know what their licensing and royalties are, but I feel like getting, let's say like, I don't know, half that, 45 million, which I don't even think they're getting that much for Monopoly Go. I think majority of that 90 million, when they combine Baldur's Gate 3 and Monopoly Go, is actually Baldur's Gate 3, to be honest. Because that's probably a closer deal and it's like a stronger IP. A lot of the things that they have to reference is like built through the D&D system, whereas like Monopoly Go, the game is super simple. So majority of the work has to be done in programming and making sure like the monetization, all that stuff is running. So I suspect though, like if you're getting, I don't know, it just seems like the Monopoly part is not making as much money. I kind of predicted that, but we'll see. And of course, they're saying like, oh, going into the next year, we're going to see a 40% drop in those royalties. So again, a lot of that's just going to be Baldur's Gate kind of falling out because again, long term, it's a single player game, effectively, that it's not really going to have a longevity. There's not like a, live service going on for this game. So of course, it's just not going to hold on for that long. I think the biggest bomb that they dropped was towards the end of the management like statements about Q4, and expectation on Q4 is going to be down to the teens in revenue growth, and then of course like they do believe that WotC will deliver single digit profits though, but again it's like low. So majority of that conversation is them saying, hey, we think the whole market is going to be really shaky and risky and cautious going to Q4. And I think that's reflected, right? Mattel's kind of down now too, stock-wise. So everybody, all the toy makers are thinking like Christmas this year is going to be really, really shaky. If we go into a recession or some sort of slowdown, like who's going to be buying like these things, right? They're going to be spending money on like food and basics, or they're definitely going to cut back on toy spending, right? So these are luxury goods. So specific numbers, right? We talked about this a little bit. WotC hitting 50% margins. Doubling the profits compared to Q3 last year. And yeah, Lord of the Rings doing super well. So I find it funny, right? So like part of this call, of course, is just them, the Hasbro folks, Chris Cox and Gina, giving the numbers and giving all the highlights of what they're going to do with the business. Oh, by the way, another highlight, they're finally going to sell that E1 entertainment bullshit business. But all that loss is still going to be carried on their books for a little bit. So that's mostly why they're like, I think they reported a $390 million loss this quarter, despite like Wizard of the Coast doing super well. Again, just stupid shit like this, right? But okay, so like one of the funny thing about these calls is like the orders, like, you have the Hasbro people talk in the beginning, they give all the numbers, whatever, and then towards the end of the call, usually like about half of that call is the analysts asking questions. And I find those questions to be really interesting, right? Because they're giving you an idea of the people who literally recommend to their investors how to trade Hasbro, right? Do you want to buy it? Should you buy it, sell it, whatever? And their questions are very leading into what they're thinking about and what they're seeing. So I think there were 2 questions from 2 different analysts about how like the numbers don't add up. And it's like, they're like on the call calling them out like, hey, can you just run through the numbers again? Because I don't think 1 + 1 = 5, right? And so they had to go through this whole thing of like, oh no, like, oh yeah, we're gonna do this operational excellence. Yeah, don't expect that to actually make money. Like what? The whole point of reducing your like costs is that you should see that on the bottom line. Like why would that not make it to the bottom line? Unless you expect to incur more loss like somewhere above, right? Basically saying like, hey, we're not actually gonna see an increase because we're gonna have like less revenue coming in, we're gonna have more costs. So this cost reduction is just gonna like at best break even for us. So some of those analyst questions are really good. If you don't want to listen to the whole like call, because in the beginning it's kind of bullshit anyways, just listen to the end. I think a lot of those questions were amazingly good this time around, right? And everyone's asking about Wizard of the Coast, of course, because this is basically Hasbro doesn't run if Wizard of the Coast doesn't make money, right? If Wizard of the Coast dies tomorrow, Hasbro's gone. It's just gone, okay? And finally, stock prices don't lie. So if you waking up today, this is when you're seeing this video, I think it's gonna be Friday. You log in, whatever, you check the stocks, and you'll notice that Wizard of the Coast is down. Hasbro is down about 15%. 14%? 14%. So about $10, right? And of course, it always drops really low because analysts are like really negative on it. And of course, it kind of recovers a little bit, but it doesn't matter. We're down like 14%, which is a lot of value here, right? Dropped. Yeah. So it sounds like Blueprint. So like my read on why it's down so much and why people have low confidence in this company is Blueprint 2.0. Good idea, announced a year ago, still haven't seen results. We haven't seen the profit come in. We haven't seen it really like make a huge difference. We've seen Magic make more money, but no one doubted Magic was going to make less money, right? So like Wizard of the Coast is a fine company. It'll do okay by itself, right? It doesn't need Hasbro. Nothing that Hasbro's doing helps. In fact, most of it just hurts, right? And and the thing is like, the stock numbers are going down because they just said like Wizard of the Coast could go into single digits for profit. And everybody's sitting there like, fuck, if Wizard of the Coast goes to single digits, that means Hasbro is really going to lose money. Because Wizard of the Coast is basically, like I've been saying for the last like 3, 4, 5 of these, like earnings call type of reports, they're staunching the bleeding, right? Hasbro's bleeding all the cash. They're stopping that. If Wizard of the Coast goes into like basically low profit margin area or low profit area, yeah, you could see some really bad like bleeding from Hasbro as a company. So everybody's cautious about Q4, and that's mostly why, like again, between Wizard of the Coast, Q4, right, and of course just like this general, the plans by management have not come to fruition after a whole year of doing the stuff. You're not even seeing like an inkling, a trajectory change type of thing. So it really concerns a lot of the analysts. And that's mostly why the stock is down the way it is. Yeah, nothing more to say. Honestly, like Hasbro, after all this time, you're like, screwing over your customers, whatever. You're not making more money. Kind of sucks, right? Like, isn't that insane? Like, they could do all this stupid stuff. They're like destroying their value of their brand or whatever, and they're actually not making more money. That's kind of funny, right? Anyways, Mark SolarGames. I'm going to stay classy and go to bed. So I'll see you next time.